Okay, let's unpack this. It's quite a jaw dropper, really. The global tech market. It's gone absolutely stratospheric. We're talking $7 trillion back in 2000, soaring to $34 trillion recently.
Huge numbers.
But here's the shocker. Europe, it used to hold, what, 30% of that market?
That's right. A strong position.
And now it's plummeted down to just 7%.
Just 7%. It's a massive shift.
So we're diving deep into this. It's like an $8 trillion question mark hanging over Europe.
Yeah.
Why is it missing out on this tech explosion? What are the surprising reasons? We've got a stack of reports, expert takes.
Lots to unpack.
Exactly. And for you listening, if you want those aha moments, that quick but thorough understanding without getting buried in data, that's our mission here today.
And the scale of this lag is truly staggering. That drop, 30% down to 7% of the global TMT market cap.
Yeah.
That's not just, a small dip. We're estimating around $8 trillion in missed opportunity for Europe just by this year.
8 trillion. Wow.
And it goes beyond market cap. Look at the world's top 50 most valuable companies. Okay, back in 2000, Europe had 22 companies on that list. Strong showing.
22, right?
Fast forward to 2023, that number's crashed down to only 4.
Only 4 from 22.
Yeah. And meanwhile, the US, it more than doubled its presence from 9 up to 22. It really underlines this massive power shift.
It's almost hard to comprehend until you see the sheer scale difference. The US Magnificent Seven,
The big tech giants.
Apple, Microsoft, those guys, their combined value is over $12 trillion.
12 trillion.
And get this, Apple, just Apple on its own, its market cap is bigger than the entire German stock market.
That single comparison says so much, doesn't it, about the value gap?
It absolutely does. And it's not just these giants distorting the picture, is it? Even overall TMT revenue growth shows Europe lagging.
Significantly. Over the last couple of decades, Europe's TMT revenue, it's roughly tripled.
Okay, tripled sounds okay in isolation.
But the rest of the world saw about a 5-fold increase. So Europe's actual slice of the new revenue generated globally, only about 10%.
Only 10% of the growth. Okay, that really paints a picture.
And if you connect this to the wider economy, well, it fits a pattern. Mario Draghi put it bluntly.
The former ECB chief.
Yeah. He said the EU is weak in the emerging technologies that will drive future growth. It's not just about league tables. It seems directly linked to Europe's economic stagnation overall.
Right, if tech is the engine for future growth.
Europe seems to be, running on fumes in that department compared to others.
So what's the surprising root cause here? Our analysis keeps pointing towards something cultural, almost. A deep-seated risk aversion.
It's fascinating, isn't it? Not a lack of ideas necessarily, but maybe an ambition gap.
Ambition gap? How so?
Well, European founders often seem to aim for, steady incremental improvements. Safer bets, maybe.
Okay.
Whereas U.S. companies, think of Uber or Amazon in their early days, they often pursue these huge, potentially loss-making strategies aiming for total market dominance. Scale first, profit later. Very different mindset.
And does the funding reflect that difference in ambition?
Absolutely. The data is pretty stark. U.S. startups, they're twice as likely to land those big funding rounds, over $15 million, compared to European ones.
Twice as likely.
Yeah. And Bill Gurley, the VC, he had this great observation. He said, European founders tend to ask, how do we minimize the downside risk?
Okay, focusing on safety.
While American founders ask, how do we maximize the upside potential? It's a fundamentally different starting point.
It sounds like European companies are almost designed to survive rather than transform.
That's a good way to put it. That focus on getting profitable quickly, it seems sensible, right?
Sure.
But it might actually hold them back from those really long-term, high-growth plays that create global giants.
And that leads to this other phenomenon you hear about Europe as an innovation farm team.
Right. You see promising European tech like Skype back in the day.
Yeah, I remember Skype.
It gets invented in Europe, shows promise, and then gets bought up and scaled by a U.S. company.
So Europe does the initial R&D, takes the early risk.
And then the massive value creation, the talent accumulation, the IP, it ends up benefiting companies outside Europe. It's a pattern.
And this ties into what some sources call a devastating leadership vacuum. You think tech icons, Jobs, Gates, Bezos, Zuckerberg.
Transformative figures.
It's harder to name European equivalents with that kind of global impact, isn't it?
It is, and some argue the European ecosystem might even sort of systematically select against those kinds of personalities, the real high-risk takers, the visionaries aiming for massive disruption.
Peter Thiel had a pretty blunt take on this.
He often does.
So the European mindset suffers from pessimism, low expectations, too much focus on safety, basically stifling innovation.
And Mariano Mazzucato adds another layer. She suggests maybe public policy in Europe is also too risk-averse.
How so?
Too much focus on de-risking investments, rather than the state actively taking risks itself, shaping markets, backing bold missions.
So it's not just the entrepreneurs, it's the whole system.
Potentially, yes.
Yeah.
And Darren Acemoglu talks about this fear of creative destruction.
The disruption that comes with new tech.
Exactly. If institutions are built to resist that kind of upheaval, it naturally slows down innovation.
Okay, so culture and risk aversion is one massive piece. What else? The regulatory side comes up a lot, the regulatory maze.
Oh, definitely. It's not just that there are regulations, it's the complexity, the sheer volume. Get this, 55% of European SMEs say regulatory hurdles are their top challenge.
Over half. That's huge.
And it acts like a massive stealth tax, just draining resources, time, money.
And sometimes regulations designed for good reasons have unintended consequences, right? Like GDPR.
Exactly. GDPR aiming to protect privacy, which is crucial.
Of course.
But critics argue the complexity, the consent rules, data handling, it can make it nearly impossible for small technology firms to compete, especially in AI, which needs lots of data.
And even if a small firm is technically exempt,
investors might still demand they meet GDPR standards anyway, so it becomes the de facto rule.
Then there's a new EU AI Act, aiming for safety, ethics, laudable goals.
Absolutely. But again, concerns are being raised. Draghi himself warned it could hamper innovation through what critics call preemptive compliance, maybe too much technocratic micromanagement. The fear is it fosters an overly risk-averse culture before the tech even develops fully.
And the Digital Markets Act, the DMA, targeting the big platforms.
And similar story.
Yeah.
Intended to create fairer markets, but it's drawn fire. Concerns about cybersecurity implications, for instance.
Right. And U.S. figures, from tech leaders to politicians, have called these EU rules basically taxation or tariffs on American companies.
Yeah, that perception is definitely out there.
So it's this core tension, Europe's commitment to high standards, which is valued.
It's usually important.
Versus the risk of accidentally stifling the innovation needed to compete globally. And it's not just the rules themselves, but the uncertainty around them.
Exactly. That uncertainty can be a real killer for investment. If you don't know how a rule will be interpreted tomorrow, or if new rules are constantly coming,
you're less likely to make big long-term bets. It's interesting, sources bring up historical parallels, like absurd regulations hindering early cars.
Apparently so. And Edison trying to regulate against Tesla's AC current.
Trying to block a better technology?
Seems like it. Or the FCC delaying FM radio in the U.S. It raises questions about unintended consequences throughout history.
And is there a link between less regulation and growth spurts historically?
Some argue that periods of, let's say, more permissive regulation in the U.S. have often correlated with significant innovation booms. It's complex, but the argument exists.
And that U.S. perception of being targeted, the de facto tariff idea.
Yes, the feeling that DMA gatekeepers or GDPR fines disproportionately hit U.S. tech firms.
Could that lead to a sort of transatlantic digital Cold War?
That's the fear some commentators raise. Increased friction, potentially diverging paths.
Okay, but it's not all gloom, is it? Europe is fighting back. There's a counteroffensive. Talent, for instance.
Definitely a bright spot. Europe's tech talent pool has been growing incredibly fast. A 24% compound annual growth rate since 2015.
24% CAGR. That's huge comparable to the U.S.
Pretty much on par, yeah. That's led to 2.9 million new tech jobs in the last decade. Total is now 3.5 million.
Wow.
And within venture-backed firms, the talent pool has exploded, a 7-fold increase.
And what about unicorns, those billion-dollar startups?
Another big positive story. Back in 2015, Europe had, 72 unicorns?
Okay.
Now it's 358. Companies people recognize globally. Spotify, Revolut, Adyen, Wise, Klarna, Bolt, and newer AI stars like Mistral.
So real success stories emerging.
Absolutely.
Yeah.
As of last year, 171 active unicorns, mainly UK, France, Germany leading the pack.
And the investment flowing in.
Strong recovery. Around $45 billion expected this year. That's nearly triple 2015 levels.
Okay.
And it represents about 16% of global VC funding. Europe actually pulled ahead of Asia in VC investment volume recently. Exit volumes are bouncing back too, up 47% year over year.
So capital's flowing, talent is growing. Where's it going? Any specific focus areas?
Yes. Definitely seeing strategic focus. Deep tech and climate tech are prominent.
Deep tech like AI.
Exactly. AI pulled in nearly $9 billion this year, about 9% of global AI funding. But deep tech, overall advanced materials, biotech, quantum, etc., accounts for a third of Europe's total funding.
A third is significant.
Very. And climate tech seed funding, that's seen the biggest percentage jump since 2015. Real momentum there.
And this is actually impacting the economy. It's not just hype.
It seems to be. Tech's contribution to GDP is rising. And there's been a shift. Software and services now dominate revenue, not hardware like in the past. Plus, ICT sector workers are generally much more productive than the average worker across the EU.
So what are the big strategic moves Europe is making to accelerate this? You mentioned unlocking capital.
Right. Things like the European Savings and Investments Union trying to mobilize more domestic capital for tech, and the European Innovation Council, the EIC, becoming a huge deep tech VC fund.
And tackling that regulatory maze.
Efforts are underway. Simplification initiatives. And crucially, mandating AI regulatory sandboxes by mid-2026. Places like Spain, Germany, they're already experimenting.
Sandboxes. Letting firms test AI under supervision.
Exactly. Fostering innovation is key too. Setting up AI factories with massive computing power. The $20 billion Invest AI initiative, the Cloud and AI Development Act, aiming to triple data centers.
Serious infrastructure investment.
Plus, data labs, the Apply AI strategy, and finally, talent. Recognizing they need to make it easier to live and work in Europe, address skills gaps through education, support entrepreneurs.
So looking ahead, what are the big recommendations, the path to becoming this tech superpower?
Well, first it loops back to culture, really pushing for that risk-taking mindset, maximizing upside, not just minimizing downside, encouraging those big transformative bets, like with this AI venture factory idea.
And maybe shifting public perception in areas like, say, defense tech.
That too. Second, optimizing regulation, not necessarily less regulation, but smarter, clearer, more agile rules. One single set of rules across the EU is a common call.
Reducing the admin burden.
Definitely. Using those sandboxes effectively. And this idea of innovation impact tests for new laws checking beforehand if they might stifle tech progress.
Makes sense. Third, mobilizing capital.
Go all in on the Savings and Investments Union. More incentives for risk capital. Smooth cross-border investing. Help European VC firms scale up.
And fourth, nurturing talent.
Make it easier to attract global talent. Maybe a European equivalent of the US H-1B visa. Invest heavily in the right education, training. Beef up support for entrepreneurs.
And finally, strategy. Play to Europe's strengths.
Exactly. Leverage strengths in industrial tech, sustainability, deep tech. Focus on key battlegrounds: AI, software, connectivity, data infrastructure, climate tech. Use the scale of the pan-European market and talent pool.
And the vision. What could this look like by, say, 2030 or 2034?
The goals are ambitious. $5 trillion in new ecosystem value, 15 million more tech jobs, huge amounts of capital unlocked, maybe even seeing the first European trillion-dollar tech companies, becoming a technology superpower for a new generation.
And there's a geopolitical urgency behind this too, isn't there?
Absolutely. Reducing reliance on U.S. tech, competing effectively with China, it's seen as vital for Europe's security and sovereignty in the long run.
So it's this shocking contrast, really. Europe has the ingredients, talent, research, market size.
The foundations are there.
But it's had this conversion problem. Failing to turn those assets into global tech giants and market share, missing out on trillions.
A huge missed opportunity, historically.
But now it feels like a real inflection point. Europe is actively tackling these issues head on. It's a moment of reckoning, but also a massive moment of opportunity.
Right. And what's interesting is how Europe seems to be defining tech superpower slightly differently.
How so?
It's not just about growth at all costs. There's this strong emphasis on trustworthiness, on sustainability, on integrating tech with its industrial strengths. It's aiming for growth, yes, but maybe a more balanced model.
Which leads to the big question, doesn't it? Can Europe truly shift that deep-seated risk aversion? Can it navigate the regulatory complexities smartly enough to really seize this moment?
Can it forge its own path, perhaps offering a different model for tech development globally?
Exactly. What role do you, our listeners, see Europe playing in tech's future? It's a huge, complex picture, and we've really only scratched the surface today.